Alright guys, check out this beauty I picked up from stageanalysis.net, US stock screeners, ZNX on the ventures, ZincX Resources Corp, and check it out, it looks so nice. After this monster top, boo, all the way down. What did that reach its target? Yes, it did. When in doubt, use a less greedy target. If I would have taken the target from this big move up here, I would have not reached it. Less greedy target, higher probabilities of reaching that possible target, guys. Think about that. Breakdown would have been here. I would have entered here. Sell stop at the end of the candle. Scary, scary, scary. And 4 months later, green. And then down you go. This is actually like a small launching pad right here. Small pattern on the breakout line. Down. All right. That's a little about my classic chart trading framework, but we're going to apply that for the closer action right here, guys. Monthly defined support, monthly defined resistance, and patterns. And right now, this is in the middle of that bigger pattern. Not sharing any of the borders. Its target. Going above this resistance. I would have adjusted that to over here, guys. Sometimes you just can't play them. But getting greedy and trying to guarantee that you're going to bust through that in a timely fashion, avoid. But we're just going to use this to confirm the overall trend, to see when we're going to zoom in on the weekly, see if we have a Stan Weinstein stage 2 breakout, and see if we have the monthly trend above. So if the monthly candle closes above 37 cents and a half, July, so a few more weeks to wait, then we know that we have the trend upwards in our favor, guys, with a target all the way up here, and that we have potential resistance, monthly defined resistance at 43. So what could happen is after breakout, and after at 43, price action might go back downwards towards the 37, and if it's on low volume going down here, then we know it's healthy and we get to go, guys. All right, 37 cents and a half. That's what we need to close above on the monthly. Zoom in time. Zoom in, zoom in, zoom in. Okay. Looks so nice. Stage 2, stage 3, stage 4, stage 1. Remember, look at that. You think it's a stage 2, but yeah, that Ichimoku cloud, guys. It really wants to, but Ichimoku cloud, hey, tough sell. Yeah, I had a hard time going through it. So sometimes even just the first breakout you want to avoid. Okay, first breakout is right here. Let's put some arrows. Zoop. Add arrows. Zoop. Right here. We see price action got sucked back in. You're running to that cloud. After that, what do you have? Oh, another nice candle. I like that. Giving another go. This candle over here. Following candle. That looked pretty nice, guys, at this stage right here. One breakout, bam, bam, 1-2 punch, I call them, right here above the Ichimoku cloud. But you see that 37 cents? You're below the monthly defined resistance. Still below it. Having difficulty going through it. That's why I always remember risk and money management. Don't lose more than 1% of your NAV on any given trade. Sometimes it looks good to go, but it's not quite there yet. You want to cut those losses to make sure you don't lose more than that. And look at that, the pullback, heavy volume though. Trying to get, you see that volume picking up? Not healthy. That's not what you want. You don't want crescendo red candles. You want decrescendo candles. Red candles are green on the way down. So it just needs a little more time to marinate. Price action goes below 30-week moving average, drags it down a little bit. But notice in the meantime, those red clouds and green clouds starting to get thinner and thinner. And you're going to hit that monthly defined support right there. And here we are today, guys. Look at that. Look at that. 1, 2, right here. And now I decided to up, and away. Right here. So now we have a candle that went to hit, again, the monthly defined resistance at 37.5. Pull back on smaller volume. And look at that. Now it's trying another go, guys. Wow. 1-2 punch. Didn't quite make it out. Went through. Now we're really above the Ichimoku cloud. 30-week average. Look at that angle. Starting to get nice. We close with more than twice the average volume of the previous 4 weeks. I don't have the Mansfield indicator comparing the stock against its index it's in. Just the RSI. I use it to give me some value to the move. And usually when we have a candle that breaks out, I'm from the halfway point going upwards. And that's what I like. Guys, man, wow. This is good. We're above the 37 cents. So now what I said is we have to need a monthly close above it. So now what you're going to do, you could always take half a position here. Where's the breakout? If it pulls back, you could pull back all the way down here. I'm not convinced this is the breakout line here. Well, it could be here. This could be the second breakout candle. First one, second one. So you might have a pullback back to the 37 cents. So let's check it out. Half position here. Sell stop right here below 30-week average, below the low of those candles. If you want to really be safe, that's your risk. Position size, not to lose more than 1% here, or 0.5% if you intend on seeing how it's going to react here. And if you're going to get a pullback close towards the 37 cents. Remove this trend line, remove this trend line, remove this trend line. And then after that, see if it bounces back here. So we could even put an alert a little higher above that line, see if the price action goes back in. So you could enter here, you could enter on a pullback on contracting volume. That'd be awesome. And after that, if you have that monthly candle close above 37.5, everything's golden. You have that confirmation, that higher target up to 46 cents, 46.5. The clues are piling on. You see that those clues are piling on and on. Right now, the only reason I wouldn't enter right now is I would love to wait for that candle close above and just see how the price action reacts above 37 cents and a half. And we're going to get a few weak candles just around here in the zone, and then it closes above, and I say, okay, I'm in. If you're afraid this thing's going to go off, even using the word afraid, guide, emotional management technique, don't use those words. I'm afraid it's going to go up, so I'm going to enter now. That doesn't make any sense. Use real metrics to get in, or find excuses not to get in, and just move on to another chart until you have no more excuses, and then it's an A++ setup, right? Have a position here is not that bad, guys. It really looks mature after that first breakout, secondary breakout, and the other half you could take it if there's a pullback on low volume here, and if the price remains above 37.5, then you can take the remainder in half. I think that's a pretty good strategy there if you want to get in on ZNX. That's it, man. Looking very sweet. So I'm going to keep this chart open, see if I give it a go, guys. Looks nice. All right. See ya.